Thanks, Stephen, for that. So we'll move quickly on to a Q&A session for both Ellie and for Stephen, just to make it easier for both of them. So first question, we supply paints to industrial customers in NI. Some are EU origin. The customer applies the paint to their manufactured goods, which are then sold inside NIGB or onto the EU rest of the world. Even though those paints are fully consumed by our customer, is the application considered processing, and are these paints at risk?
I think Ellie may take that one if possible.
Yeah, thank you. So the thing to think about when you're moving them into Northern Ireland is so the first thing would be what's the origin of the goods? Can you use the trade agreement? Obviously, if they're paints that are from the EU, they would be EU origin goods, so they wouldn't be able to use the trade agreement. You would then need to think about are they used for processing? So, I think the thing to think about with processing is if you are going to go and do something with those paints, or somebody's going to do something with them in Northern Ireland, so put them into a process to manufacture something else, then that is processing. The difference would be is if you were bringing them in, for example, to just sell in a retail shop or in a wholesale environment in Northern Ireland, that may be different. Then you might want to look at the UK trader scheme in those cases. But if you are bringing that paint into Northern Ireland, it's going to be put into part of a manufacturing process, then you would probably think that's going to be at risk. The thing you might want to look at if the goods are brought from the EU into Great Britain and then back into Northern Ireland, and that is the case, is there is an existing customs relief, which is returned goods relief, and that allows goods that have been exported from the EU and brought into Great Britain that are then taken back into the EU to claim a relief on any additional tariff that would be chargeable on their return. Now, although these are going into Northern Ireland, because you would be charging the EU's tariff if the goods are at risk, you can use returned goods relief in order to claim relief from that tariff. So if that's what you're doing and there's nothing happens to those paints while they're in Great Britain, returned goods relief could be an option for the business in order to mitigate any tariff charge that would arise on entry to Northern Ireland. There's conditions that have to be met, including in terms of how long they can be in Great Britain, and you would need proof that they had originally been exported from the EU. But it is definitely something to consider in terms of mitigating that tariff impact.
That's perfect. Next question. We manufacture and ship goods of UK origin to distributors in Northern Ireland. Although most shipments to Northern Ireland will be used in Northern Ireland, there is a small chance that some of the goods could be used in the Republic. Can any goods with UK origin and shipped into NI be tariff-free if they cross the border into the Republic?
So, sorry, I kind of lost the very start of the question, but by the time you got to the end of it, are the goods coming from Great Britain to Northern Ireland in that scenario?
Yes.
Yes. So if the goods are going Great Britain to Northern Ireland and they have UK origin, so they're UK origin goods, they meet those UK origin requirements, then they can move into Northern Ireland tariff-free, irrespective of what's going to happen to them afterwards, because you can use the UK-EU trade agreement. And as I've mentioned under that before, in either case, you've either got goods that are staying in Northern Ireland, internal UK trade, no tariffs are applicable, or you have got goods that may be going into the EU, so would normally be at risk and the EU tariff would be applied. However, the trade agreement means that in that second example, there is no tariff because the trade agreement provides for that zero tariff, and therefore you end up with a zero tariff outcome whichever. So you would want to use the UK-EU trade agreement there to claim the preferential tariff, and that means you don't need to distinguish between staying in Northern Ireland, going into the EU. You can just say all of these goods are zero tariff.
That's perfect.
Another question. We send parts that are fitted to customer equipment in Northern and Southern Ireland that are then shipped from Germany but manufactured in Latvia. How would duties and taxes have to be paid on this?
So, Stephen, I don't know if you wanted to come in on this. I might have to work this one through in a bit more detail.
I might need much longer than that myself. So from what I think I heard, was that there are GB goods coming to Northern Ireland and Southern Ireland, but then go back out to continental Europe and finalising their processing or their production in Latvia. Is that correct?
Yes, that's right.
So I think it's still, I mean, once goods are made in Northern Ireland and they have had sufficient processing here, then they can freely circulate within the EU's marketplace. I think the challenge may well be, Ellie may come in this in terms of that GB content into that.
Yes, I mean, I think the thing to think about is where would any customs processes apply? So if you've got GB to NI, that's the point in time when you have a customs process to think about, and we would need to think about what's the origin of the goods. Can they use the trade agreement? Are they at risk or are they not at risk? If they're going into Northern Ireland for processing, then we come to the de facto they will be at risk, and therefore the EU's tariff is chargeable unless they were UK origin goods, in which case you could apply the trade agreement and claim the zero tariff. Once they're in Northern Ireland and then they're manufactured into whatever happens next, you've then got goods that can move freely within the EU single market. So the subsequent movement of them on to Germany and then potentially onto Latvia, you've no new customs processes then, because they're within the single market. So actually you only need to think about what's happening to the goods and what the goods are and what their origin is at the point they move into Northern Ireland. I think that's to think about, on the basis that the subsequent movements of the goods from Northern Ireland to Germany and from Germany to Latvia all happen within the EU. So you're not moving them via Great Britain. You then wouldn't need any further customs processes.
What I would just add is that the logic to me would say that it'd be much better bringing that direct from GB into Northern Ireland, where the processes are smoother, where they're operating much more efficiently, where there's support in place in terms of the Trader Support Service, where there's other other tools in terms of UK Trader Service, waivers and exemptions, and once they're here in Northern Ireland, they can then freely circulate in the EU's marketplace. The border in Belfast is not the same as the border in Calais and not the same as the border in Dublin. Those borders are operating under the same rules, but they're operating much more efficiently in Belfast or in Larne than they are in Dublin or in Calais. So it would make practical sense to look at actually bringing that to Northern Ireland first and beginning the process there. So once they've cleared that border, they're able to freely circulate in the EU's marketplace.
That's perfect. Next question. Is it correct that goods manufactured in NI which comply with CE marking can be placed onto the GB market without the UK CA mark?
Yes, short answer is yes. So under the agreement that's made between the UK and the EU, we have to follow EU rules, which means we use the CE marking. But under the rules of the Internal Market Bill, so the new bill that actually defines the relationship and the trade within the United Kingdom, we have that unfettered access. So we only are required for one conformity assessment and not at least two, which would be the case if for a GB business looking to sell into the EU and continue to sell in GB.
Thanks for that. Next question. If I import into Northern Ireland and they meet the criteria of either EU or UK origin, although duties and tariffs might not apply, will import VAT apply in this case?
So there's depending whether it's a GB to Northern Ireland or rest of world to Northern Ireland, VAT can work in two different ways. So GB to Northern Ireland first. For GB to Northern Ireland goods movements, although technically under the protocol import VAT is liable, we are using processes that are allowed within the VAT directives to in most cases treat that transaction as if it were a domestic transaction. So if you sell goods from Great Britain to a buyer in Northern Ireland, you will continue to work the VAT as if it were a domestic transaction. So the seller will charge VAT on their invoice, they'll pay output tax on their VAT return, and the buyer of those goods will get an invoice and be able to reclaim input tax subject to normal rules. The main difference for that is if you are moving your own goods into Northern Ireland, then you would have to account for a self-supply of those goods. So you would declare both output tax and claim input tax on the same VAT return, assuming that you're fully taxable. So that's in the kind of GB to NI goods flow. For rest of world imports into Northern Ireland, yes, import VAT is chargeable in the same as imports into other parts of the UK, but postponed VAT accounting is available there. So instead of paying import VAT at the time of import, you can instead declare that through your VAT return, which gives you a bit of a cash flow benefit in terms of it's done that later point in time. So just a couple of different things to think about. If you're a Northern Ireland business trading with the rest of the EU in goods, as Stephen has mentioned, you continue to operate that as if it was Northern Ireland was a member state. So you'll continue to do zero rate removals to the EU, and you will continue to account for acquisition VAT on goods that you buy in from an EU member state. And you can apply for an an XI prefixed VAT number in order to do that and to use for those interactions with businesses in the EU. So if you're in Northern Ireland and you're trading goods with the EU, you may need an XI VAT number in order to trade with them. But just to add to that, sorry, it is all done via your UK VAT return. There are no separate VAT returns for Northern Ireland. There's no separate VAT registration for Northern Ireland. Everything continues to happen on your UK VAT return, and there's no change in terms of how a VAT return works.
Thanks.
Another slight product labelling one. As a UK machinery manufacturer producing to CE standards, how do I go about securing a UK NI certification, and is this a requirement now?
So I can take that up. They can continue with their CE marking, so stuff that's here in Northern Ireland can have that CE marking applied to it. So it's through the same process as before. Now the challenge will be that some of the notifying bodies, many of the notifying bodies have, but some still have to find a workaround in terms of being approved in the EU. So it's worth checking with your notifying body first what their intention is in terms of holding your certification. What we've encouraged businesses to do is to port or to store their certification within the EU for goods that are already certified, and that provides the chance for that CE marking to continue and to provide unfettered access back into the rest of the UK marketplace. But the critical conversation, if you're using a notifying body, is to have the conversation with them first, because many have found a workaround to ensure that they can continue to notify. If you self-notify, it's the same principle as before.
Thanks for that. So this company manufactures steel structural parts for sale to a company in Northern Ireland. If we came to terms for future sales to Ex Works, so goods collected by the customer, does this relieve us of responsibility of making declarations?
So different Incoterms, obviously, that will determine who has the responsibility for making declarations into Northern Ireland. There's a lot of different Incoterms, and it can be quite complex to navigate, and the TSS support materials does have some really useful content on working through different Incoterms. Broadly speaking, though, for almost all Incoterms, the Northern Ireland buyer of the goods will be the person responsible for making the declaration for the goods moving into Northern Ireland, and that would be true if the goods are Ex Works. The only exception is normally where it's on delivered duty paid terms, which is where the supplier of the goods takes responsibility for everything, including delivery of the goods to the buyer. So on that basis, your Northern Ireland buyer would be the person responsible for making the declaration. However, it feels a bit kind of disingenuous to say it involves you of all responsibility, because as part of that process of making import declarations, they will need information from the seller of the goods in order to have the data to do that. And they will need some of that in advance of the goods moving, because the declaration process obviously requires some data to be before the goods move and then some afterwards. So a business in Great Britain who is supplying on Ex Works terms, while they don't have a declaration obligation, they do need to understand what this means and the information that will be required for customs declarations, as some of it they may need to provide to their customer.
That's perfect. What happens to goods that are manufactured in Northern Ireland, then come to the UK to undergo a coating process and then sent back to Northern Ireland? What additional documentation is required? Do we have to make any declarations?
So if I talk about declarations, and then Stephen, you might want to comment on any kind of regulatory bit. So if you've got goods that have started their manufacturing in Northern Ireland, they can move into the rest of the UK using the unfettered access provision. So they would therefore not need any declarations or customs processes to move into Great Britain, and they could have whatever processes carried out there done. When they subsequently move back into Northern Ireland, that's the point in time where you would need to make those import declarations, and you would need to then consider whether the goods are at risk, or whether the UK-EU trade agreement could be used in order to claim the zero tariff. Now, if the goods are manufactured in Northern Ireland, they will have UK origin, because Northern Ireland is part of the UK. So for origin purposes, it is the UK. So the one thing your first kind of, as I think this through, my first sort of thought process would be, well, if they're UK origin goods moving into Northern Ireland, then you should just be able to use the UK-EU trade agreement to claim that zero tariff. And then you don't need to worry about at risk, not at risk. You're creating a zero tariff outcome in either case. And that was probably one of the simpler things that you could do. In more complex scenarios, you would have to then consider, if you couldn't just prove the origin, you might then need to think about what's the, are the goods at risk? Can I declare them not at risk? Or you may want to look at using a processing relief while they're in Great Britain in order to mitigate tariffs on re-entry to Northern Ireland. So there are a number of options here, but my first sort of thought process would be, are they UK origin? Can I use the trade agreement?
One here now. If customers are returning goods from NI to GB, do they need to have an XI EORI number to do this?
So I think if we come back to the general thing of the majority of goods movements from Northern Ireland to Great Britain can use the unfettered access provisions, and there's no processes. So you don't need an EORI number if there's no customs declaration process to engage with. So from what it sounds like from the question, I guess, your customer may be an individual or it could be a business. And if they're simply returning those goods to you, if they can be done under the unfettered access provisions, then there's no declaration. So nobody needs an EORI number in respect of that transaction. If there were a declaration process required, then whoever is responsible for the declaration for the goods coming out of Northern Ireland would need an EORI number in order to do that. But in most cases, that won't be necessary.
Thank you, Ellie.
On imports to NI, whose responsibility is it to do the supplementary customs declarations at present?
So this comes back to the question that we had a little while ago about Incoterms. So the Incoterms work out who is responsible for making the customs declaration, so who is the declarant. And as I mentioned, for most Incoterms, it will be the Northern Ireland buyer of the goods, unless it's delivered duty pay terms, in which case it would be the GB supplier of the goods. That person is responsible for the import declaration as a whole, and that includes both parts of it, both the frontier declaration and the supplementary declaration. Now, the way the TSS process works is because the frontier declaration is done alongside the safety and security declaration, that is often in the way that the process works. The data is provided by the person moving the goods, and it might be instigated by the person selling the goods. So the buyer of the goods might not, have much involvement in that process, but that doesn't change the responsibility for the actual underlying declaration, and that doesn't change then the responsibility for the supplementary declaration, because those two parts are two elements to one whole declaration. And I think that's always the thing to keep in mind. Under the TSS process, the TSS will reach out to the person who is noted into their system as being the declarant. So that's the person responsible for the declaration, to get information for the supplementary declaration. So the Northern Ireland buyer in most instances should be prepared that they will need to do that, and they will need to have that data ready.
Perfect, thank you.
Thanks very much for Ellie. I think we'll try to do, have we got time for just one more question? I think we do. We import from China to UK and pay duty as per customs, but then ship to our customer branch in Northern Ireland. Would duty be required to be paid again? This company is a supplier of LED lighting to wholesalers, which then go on for resale.
So this one comes back to kind of, we work through our steps. So the thing to remember is the import to Great Britain and the movement of the goods into Northern Ireland are two separate things, and we need to look at them separately and what the processes are for each. So the import to Great Britain, absolutely right, tariffs will probably be payable, and import declarations will be needed. The movement of the goods then into Northern Ireland is completely separate from that. We need to then think about, is a tariff payable? Are the goods at risk of moving into the EU? Does the EU tariff need to be paid? Now, when we come to, can I use the EU-UK trade agreement? Probably not in this case, because the goods have Chinese origin, so they wouldn't meet the UK origin requirements to use that. So we need to consider, are they at risk? And that will come down to, is the person who is moving them into Northern Ireland and the person who's responsible for the declaration, are they registered with the UK trader scheme? Can they be registered with the UK trader scheme? If they are the goods moved into Northern Ireland for one of those processes that you can declare goods not at risk? So if they are for sale to final consumers in Northern Ireland, then you can declare that they are not at risk. So if they are going for stock in a retail type environment in Northern Ireland, you could declare them not at risk. But it's difficult to know without more detail to be kind of any more definite on that. And it's also worth noting that if they're going into Northern Ireland for wholesale, where they could go to businesses in either Northern Ireland or the Republic of Ireland or in the EU and be used in further processes, then they're not going in for retail sale. And so you may not be able to declare them not at risk in those circumstances. So I think it comes to looking at what actually happens to the goods and then looking at the application of the rules, and does that come within one of those categories where you can declare goods are not at risk or not? And then that's the thing the business needs to be thinking about. Thanks
very much for that, Ellie. So thank you to both of our speakers. Next Wednesday, we tackle VAT and what the UK-EU deal means for taxation, the implications for your business, and also how to register and pay VAT in each individual member state. We'll have speakers from HMRC again and Mark Ellis from BDO. Aaron's going to be pasting a link for to join that session into the chat now. So thank you everybody for joining, and hope to see you next week. And a special thank you to Stephen and to Ellie. Thank you very much.
Thank you.